looking at a lot of the headlines I get in gold and silver and some of these things. That's why I put out something called the physical silver pump and dump, because there are people making extraordinarily high headlines, and they're going to have the average person holding the metal far beyond its peak. But I also am of the camp that I think you should always hold back. I've always had some physical silver and gold for decades because I just believe in this stuff, so I would never sell all of it. That's just how I am. Some of the headlines were like $10,000 gold, a conservative estimate. That could happen, but I'm telling you, that's going to be a psychological bubble, and that's going to be tough. But I think these guys are pushing figures far beyond where it's going to go to. James Turk and Eric Sprott, gold mania is coming. That's something they both have a vested interest in. That is quite obvious. We are all gold standard extremists. I could tell you right now, let me put it this way. I don't know if I should say this on YouTube, whatever, but when this country was formed, and I don't want to encourage something bad here, but it took a lot of cojones to really change things, and it wasn't armchair. So the powers that be are, I'll just put it that way, I don't want to get into this Alex Jones type stuff because he pumps everybody up. But the powers that be, and you can read it right on Foreign Affairs, Council on Foreign Relations publication. They want a war with Iran. They want the euro to stay together. They want Germany to be a leader in the euro. Well, the powers that be aren't going to have a gold standard. It's going to be part of it, but it's not going to be a gold standard. And it was even the bankers that took us off the, if you want to call it that actually took us off, that demonetized silver over a century ago. So some of this stuff, people get into these things where we're going to go back to the way that was over 100 years ago. There's a hell of a lot of power that's behind not having it that way. And I think there's going to be it's going to be electronic money. So that's the reality behind it. So, but being in the right place is still going to help you out. David Morgan sees $2,500 gold for 2012. This guy, I like his kind of predictions because he's not a pump and dump type person. He's actually for real. Him, I respect. I respect him. As far as in the gold and silver crowd, Mike Maloney, I think he's a good guy. And as far as the general markets, the two I respect the most is Mark Farber and Jim Rogers. Now, David Morgan, I think he does give good advice. And my impression was he's scared to go on record as saying that silver might go to 75 or 80 or even a little bit more this year because he doesn't want to be saying that. Now, that's just my guess, but the way I look at it is this. If you go to $2,400 gold, and we had 31, the silver to gold ratio was 31-32, it might go a little lower than that. It might go below 30. Well, at 30 to 1 silver to gold, at $2,400 gold, it's $80 silver. And I know that's just a simple math, it's arithmetic calculation, but it's plain common sense, as crazy as it sounds right now. Another headline out there, 13 states see currencies made of silver and gold. I don't know if this is all going to come about or if that's good or what. And Bob Chapman, and this was basically a headline that was out there, but it was taken out of context. He doesn't say this as a fact, but he says it was a possibility that gold could be 3,200 in February 2012. And obviously I remarked that even if he was saying that it was some type of possibility, I think that was nuts. And that's why I think he knows better, but I don't know why he says these. Well, let me forget about it. Any more comment on that? But I think this David Morgan prediction of $2,500 gold for 2012 could be legit all the way. Now, for Monday, They still haven't signed off on the Greek deal yet. The leaders of Germany, Italy, and Greece are optimistic, quote unquote, that a deal on a second bailout for Athens can be clinched next week. So that could be, and they're probably, like I stated before in another article we saw, that they're going to probably get the first tranche, as they call it, not the second tranche, but the first tranche will take them through April, which is okay. And that's enough to maybe heat up the markets. Agreement on a second 130 billion euro, 170 billion dollars US dollars bailout has been delayed for months due to doubts over Greek political commitment to tough new austerity measures, and we've seen this stuff, and that's been killing the metals, and that's been making uncertainty in the market, as well as worsening the economic situation in the country that kicked off Europe's debt crisis 2 years ago. And like I said, the powers that be are going to keep the European Union together. And the only thing is, crisis is going to bring about more centralized control, centralized taxation, centralized ruling of bureaucracy, whatever you want to call it, and centralized, well, we're going to have a 1 euro wide bond, which will probably compete directly with the U.S. bond, so actually it would. And China is also going to be probably helping Euro by buying more of its debt. That's been in the headlines too. The statement from Merkel's spokesman is the strongest indication yet that finance ministers from the 17 Euro countries can approve the new rescue at their Brussels meeting Monday. Now, not that I noticed for a fact, and I almost, just the way things go, silver could be down on Monday. It could be up. But I think soon as this package gets signed off, I think it is because of elections. Elections coming up in Greece. That's why I think it's a given. Now, as far as it's going to happen exactly on Monday, I don't know. I almost think, people behind the scenes know, and they create drama one way or the other to affect the markets, and I'm sure they're placing their bets, and you can do this on a daily basis. And me, if I make a bet on a smaller basis, I will pull it out of there on a gain. If I don't get a gain, I'll hold, because I don't just make it on a daily basis. I'll make the bet on fundamentals too, where I think something's going to go even within the next 2 or 3 months. But if I get a hard gain, goodbye, I take it out. This is the Euro chart, and it did pull back a little bit, but it wasn't. I think it was just a matter of it was just getting a little bit too ahead of itself. So it's probably going to wait the outcome of what's going to happen on Monday, and it'll probably go up quite a, probably see it high. If they sign up on this deal with Greece, expect the euro to strengthen. Common sense, right? So I've been noticing that even though the correlation between silver and the drama that's happening in the euro doesn't seem to be there as much as it was before, in the fall of the winter of 2011, it seems that there still is some effect on it, and there is still some effect on the general markets. So this is something to be watched. So I think it's going to get signed off, and that's going to help out silver. Now the silver to gold ratio is still pretty lousy. It's getting a little bit better, and we had a 20% movement upward in the price of silver in January, and a 10% in gold. So I just think that was a hard movement, so things have settled down for a little bit, and we're probably going to start seeing things move again. So, I mean, I can easily see silver going up to about, this 34.50 or something like that, or maybe getting back into this range again where it was, upon some good news about the euro. Now, I might just get out of USLV too quick, but if I got a gain, and I see a gain, and it's decent enough, I'll take it. That's probably what I'll do. But I'm going to judge everything by ear. So, like, I bought a little bit more into USLV because it got cheaper, and the news as far as the economic outlook doesn't look so bad, and I think I'd be scared as all hell to buy leverage when silver was going over 40. And even though you could say it's going to go up, 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 and I definitely wouldn't be buying it at 50. Forget about it. So I think if there's a time to buy it, might be about now, because I don't think it's going to float too much lower, if it does at all. Um, Again, this was that was the silver to gold ratio again. Now, as far as oil, it's looks like it's going to close well over 103 today. Now, I just want to point out back here in this time frame, at the end of the year, oil was around 103 also. It closed over 103. It was around 103. Now, yeah, it's actually closed at 103.66, it looks like, on January 4th. Now, what happened? What happened? It sank, right? That's what I'm saying. It was almost like there was a lot of tensions going on, because there was a lot of stories in the news about the Straits of Hormuz being closed, Israel planning to do an attack right away, and that's actually what's driving this market right now. Now, it still can go up because there could be more tensions going on, but it can also go down, because this isn't over fundamental supply and demand, because the demand is actually pretty low. And I think one other thing that might affect the oil prices downward is that, in actuality, like China, South Korea, Japan, India are getting oil from Iran at a steep discount. So you'd almost think that's going to, it's not our market. That's, they're getting it at another price. They're not paying any Brent price. They're getting a big discount. Big discount. That's helping their economies out, which means they might buy more of it. I would think so. A little common sense, right? If you're China, India, Japan, South Korea, and you're getting this stuff cheap and you figure it's going to keep going up, I think I would load up on it pretty good, right? Because the war is going to come up and it's going to get real expensive. So there's probably a lot of cheap oil sales coming out of Iran to these countries. And you almost figure that almost has a counterbalance on what's going on in the global price. It's actually like the Western markets that are moving upward. So I'd almost think that it could settle down a little bit, but if I was to buy into it, I probably wouldn't try to wait till it got down here. I'd probably wait till it got down to like 100, because 100 seems to be this psychological resistance point, and it might be a new range. It might be a range that it's going to go, it might go up a little more, then it'll probably come back down. I almost think it is going to come down before it gets up to these high levels. From here, I would almost guarantee that it's not going to go from here to like 120 unless they attack Iran or something. I just don't think it is. But that's like my opinion. I think it'll drift a little lower before it gets up to the really high levels. And that's just what's happened. I mean, if you will remember those news stories back then, it was about this level right now. So this is actually kind of a technical point of resistance in a way. Like 103, 104, maybe more like 105 would be like much harder resistance. That's why it could drop down. It might be a range from 105 to 195, and it could even go below 100. But that's why I'm not into buying that right now. But if you're holding it, set your stops, because I think that's what's going to happen. It might drift lower. As far as like a lot of these predictions out there, like I said, be very, very wary. David Morgan, I like what he says a lot of times, and he's a lot more reasonable about what his predictions are, and I think he kind of lowballs things sometimes, that you're probably going to see silver actually exceed $60 an ounce, and just beware though, it's going to crash. It's going to crash, and that's just how silver is. So, and as far as what the industrial metals are still doing, this ratio on gold platinum is still messed up. Gold is still more money than platinum. Platinum is still less money than gold. So if the economies are going to be heating up throughout the world because of good news about the global manufacturing, and the automotive sales are up They've been up. They've been going up. They're forecast to go up. And there's been record demands for these metals last year, even though the prices pulled back. I think that all these metals are going to go up. So I think it's going to be an incredibly good year, but I do get annoyed by some of these people are coming out with all these things like this, like us against them. We got the bankers on the run. Well, you know what? The way to get the bankers on the run is to make your moves accordingly on the highs and lows, or as near the highs and lows as possible, or the lows, catching the lows as close as possible, and not be afraid to make a sale at the highs too. If you can catch, reasonably estimate where the highs are going to be, because that is really the game of breaking the banksters, or whatever the hell it is you want to call it. I think this thing where you're just buying a piece of metal and holding it forever is not the way to do it. So I think, as far as this year goes, we're going to have a very good year, but beware of some wild estimates out there, like this thing here down on the bottom, $3,200 gold by February 2012. Whether that was just taken out of context, and I know it was, but beware of some of these things. It's gold mania is coming. I think that's a real good thing, and the word is emphasis on mania, because there are plenty of individuals out there with a vested interest in pumping up a bubble, but that does not mean the bubble can go a hell of a lot farther than you would expect, and it is going to be very difficult to judge exactly where the peak is. And this silver gold ratio is going to be a good judge of exactly where that thing's going to go to. So in the immediate future, silver might have a good week next week, but like I said, everybody knows it's the devil's metal. Nobody knows what it's going to do for sure, and I think a lot might depend upon the euro. And they could say the game is rigged or whatever the hell it is, but a little common sense goes a long way to trying to unravel the mysteries of how the markets are going to move.